Trading with Livevol. This is Stephen Choi. Basically here, what I do is I trade my own Reg T account, and I use LVX to trade. And then you guys can kind of see how I use the software to trade. So let's go right to it. There's a lot to cover. Oh, and for those of you guys who do tune in on a regular basis, tomorrow I will be doing it at 9:30, just because the schedule doesn't let me do it at 10. So I'm going to do it at 9:30 tomorrow for those of you guys following. So here is today. Pretty much nothing much is going on. I'm pretty flat. I am long delta. But because I'm long gamma a little bit, looks like it's not hurting me as much, and obviously I have the data going on my in my favor, right? So I'm trying to get to the point where I'm basically continuously getting data. I'm currently I think using about 20,000 of my equity for margin requirements and stuff like that, and I'm collecting about 170. That sounds pretty good. I had a gentleman here yesterday. He had a specific amount that he collects data versus his whole portfolio. So I thought that was actually a pretty good way of doing it. I think for me, I'm right around like 1%, but I'll see. I'll see how it goes. So let's actually jump right to it. So I'll actually go to the SPX real quick, just the whole general market in general, just so you guys can see a perspective of what I'm thinking. So as you guys know, I thought SPX was going to reach 1900. So right around here, I was still bullish, but I pretty much took off all my deltas right here. I think like, I'm not sure, it might have been this day or this day. Basically, I sold at the bottom because I don't know. I guess I didn't like the action, the whole thing with the situation in Ukraine, and I thought the upside was kind of limited, and there was risk to the downside. So you see how like it reached 1900. So that it did reach 1900, but then you see these sell-offs are pretty drastic, right? Now it's not drastic in the long term. So like if I look at monthly, I just want to put it in perspective. It's almost like no movement, right? It's flat. But what I'm saying is if you have options that expire like within a month or so, these movement can really affect your P&L. So so generally. I think I'm not bearish. I'm not like saying be short, but I think just the upside is a little trickier. So that's my whole kind of like general viewpoint on the marketplace. I'm more fearful of the downside than my greed to the upside. So that's why I'm more neutral. The other thing is, as you guys know, I was doing like little comparison 2000. And when they were selling out the high beta or the growth stocks, the kind of things that they were going into were utilities. So I've been kind of getting interested in utilities the past, past couple of days, basically. So let's actually go to some of the trades that I have today. So that's kind of the background, right? So AAP, I did earnings strangle. The 115, 130. Let me see historical trades. Let me see how far apply. And I'll show you guys what I did in AAP. I sold a strangle, and then today I just closed it. So that's about that's pretty much the whole extent to it. Let's see, AP. So I sold these. I sold these for basically 170. The May 115, 130 put spread. just basically because most of the news was out, and you know, I kind of felt like it wasn't going to move that much. So like these were the ones I sold, and then today you can see I bought them back for a nickel. So it was a pretty good trade. So AAP is an earnings thing that went pretty well. Now something that didn't go too well is this YOKU, and this is completely my fault. So I bought this spread because they were buying all these calls on the May 22s. What I found out was that the earnings wasn't confirmed. So maybe like the guys who were trading it as well, they didn't really notice it either. Either that they were buying these calls and selling stock. But in either case, that's on me for not making sure that it was a confirmed earnings and that it was unconfirmed. I don't know why I didn't check it. I guess I was kind of distracted. But that's a mistake, and it's going to cost me probably like $200, right? Because I bought these for 50 cents thinking it's going to go up. And now basically they're going to be zero. So that kind of sucks, but you know, basically going, you know, I'm just going to move forward, and hopefully I don't make that mistake again. Okay, Macy's. So Macy's was another earnings. I sold this strangle. Looks like I closed the. Okay, yeah, so I closed the puts, looks like. Let me actually show it to you guys. Historical. Macy's. Yeah, so you see how I sold these for 70 cents. And basically, this one's still open, which is only a penny. And I think I bought the puts back today. Macy's, yeah. So I bought the 55 puts 3 times for 6 cents. So that worked out pretty well. Kate was another earnings. I sold the May 33 puts for 70 cents, and then I bought the May 35 puts for a nickel. Now, so this is kind of interesting. Let me see, Kate. Kate, oh damn. Kate, yeah, so basically I sold these 33 puts for 70, and then next day I bought these back for a nickel. Now I just bought them back just, you know, because instead of closing this, I could buy the 2 strikes higher for a nickel and close it essentially. But now that the stocks dropped so much, the market's going down, I'm actually not that far away from this actually becoming in the money. So I might actually have a shot of making more than the 65 cents in premium that I collected. So that's kind of pretty good. DE. So I did this 1x2. Bought one of the May 94s and sold 2 of the May 96. And what I did was a 1x2 because I thought the upside was little capped, but I was bullish. And I paid what? 68, 32, 37 cents. And then I closed these the next day. And it didn't work out. So it seems like there's a theme here. I don't know if you guys have been following it. So everything that I sold to collect premium, I made. And everything that I bought has not worked out well. So I'm not sure if that's telling me something, but everything I sold worked, everything I bought did not. But that's that. In IWC, I want to show you guys something interesting. I also write for Fidelity.com, if you guys have an account over there. And what I wrote today about was this IWC. So this person rolled out of the May 70s and rolled into the June 69s. Right? But I want to show you guys something that's very, very cool. So this actually is not his first roll. So if you look at it, right, you see this open interest. he actually created this open interest on May 8th. So he did this spread today for 90 cents. So he paid 90 to get out of the May 70 puts and get into the June 69 puts, right, for 90 cents. You see this 3,300 trade, right? On May 8th, right, and I'm going to go to May 8th here. On May 8th, what he did was he actually rolled out of the May 72s, which he bought earlier, right here, and then sold. He sold the May 72s and bought the May 70s for 135, right? So the May 72s, if you go to May 72s, that was the roll prior to today's roll, right? May 72s, you see the put, the original put was done on April 15th. So I go to April 15th. Oh, just so you guys know, I did this before I got on the show, so it's not like I'm doing it. He actually sold the April 77 puts, right, and bought the May 72 puts for over $3 credit, right? And then basically the real question is, well, when did he put on this April 77? And basically I figured out he did it on March 26th is when he originally started the trade. So what's powerful about this software is like, so this guy originally on March 26th thought, hey, this stock's going down, right? So normally like you would pick like some small cap stocks like an IWM because they were getting hit first. Maybe that the research figured out people are rolling, or maybe his company was rolling, and so he knew that there was a lot of sell orders on these small caps, right? So he starts buying the April 77 put. So he buys these for about 173, right? So that's his initial bet on March 26th. That's right around here, right? Now, I personally did not see anything on that day. So basically, this got missed by me, right? So on April 15th, this is when I caught it. Day before expiration, the guy actually sells this, the one that he paid 173, and rolls into the May 72 puts, right, for like over $3 credit. So he paid 173. He now rolled it into the other one for like $3 credit. So basically, he owns those puts for 135 credit, right, because he rolled down. So now he owns those puts for free, right? So at this point was when I got in, because he was already right the first time, right? So I like to follow the trend. The guy was right, so I piggybacked him, right? So I piggybacked him here, and then on May 8th, basically he rolled out of the 72s, which are now 265, and rolled into these for another 135 credit. So now he owns 3,500 puts for 260 credit, right? And today he rolled into the June 69 puts, and he paid looks like around 95 cents or so, right? So now he owns a June 69 puts for 170 credit, right? So I'm following this, and you can follow that using this platform. You don't need any like some sophisticated like algos to run. You just click on it, you see where it traded. It's on May 8th. You actually go to the charts tab, you actually click on May 8th, and boom, you see like this trade. Then you're like, oh, before that he did the May 72s. So you go back to the montage, you click on May 72s, you see the May 8th, and before you put it on April 15th, you go to April 15th, right? And boom, there it is. There's the 2,700 that he rolled, and basically he rolled out of the Aprils, right? So he rolled out of the Aprils, and rolled into the Mays 3,500 times. So basically, you can follow that. Now, the whole question is, well, when did he put on the Aprils? You can't click on this and get the same chart, right? So you basically have to do some detective work. So what I did was, it doesn't seem like he's rolling like 1 month at a time. So I knew it had to be on this range. So like I just click on any of these bars that were large. So like the one that was large in March was right here. I looked down and boom. I actually got it in like almost my first try, right? Maybe like 1 day off, because I was looking at the bars. Because I know he was doing block trades. So you see how this block trade, block trade, block trade. So I knew when he put it on, it couldn't have been like one of these bars that was 0. Had to be a bigger one. And he likes to doing it a month out. So this was the prime range. So like using some small deductive reasoning, you just roll back and then you actually click on the bar chart and it'll give you the montage, and that's how I did it. So this guy's been on a winning streak with this trade. Now, I'm not going to put it on just because he put it on, right? The reason I would put it on is the fact that SPX looks weak. IWM has been always selling off greater than the SPX, and it looks like IWC is like kind of like the IWM of versus like SPX, right? So it's like the micro cap. So it's even smaller cap stocks, which is probably even more speculatory, which means that they'll sell off even more than the IWM itself. So so it made sense to me, right? So since he is actually on a streak, that actually bodes well. The only thing I don't like is look at the volatility, right? So the volatility is at 73 percentile. The thing is, I was like not doing the same amount of roll. So what I did today was, I don't want to confuse you guys. So I did this roll only, the 70, 69, but I forgot I only had a 1 lot, and I did 5 lot spread. So I was actually short 4, and I didn't want to be long delta when I think the stock is going down, or this ETF. So I had to basically buy these for 210, which was the next best option to kind of like get rid of this line altogether, right? So this -4, this spread basically cancels each other out because they're pretty much 100 delta. And right now I only have this position, which is what he has as well. So I only have this position and this 1 lot right here, and I'll have to see what I'm going to do as it goes down, how to hedge it. Let me see, other ones. The other one is XLE. So I did this spread way back when this guy did the roll. So again, I was just piggybacking this guy's trade because I thought it was pretty good. Because it had a pretty good up run. So it's about 76 cents, right? So it actually didn't work like pretty much the whole month. And now with a day to go, looks like it's giving me a little chance. But you know, most likely it's not going to happen because I'm going to need a huge drop even tomorrow. Like you see how it's here, I would have to see this drop below 92 for me to even make anything. So I guess the decision now for me is, do I sell this for a dime or just keep it? And since I wrote it off, I'm just going to keep it for now, right? If anything, I might maybe sell some of these, but I'll do that at the end of the day. So I might sell like this for like 7 cents, 6 cents, just to get some money back. But, you know, the guy put it on for 76 or something else, piggybacking it. So this so far has been a loser. Facebook. So in Facebook, you guys know that I'm doing like the roll. So I'm kind of bullish on Facebook. So I bought these sets. I sold them May 17. And basically now what I did was I rolled from May 17 to May 23. 62 puts, so that's a little lower, but I kind of feel like it's not really going to move up too much. So I'm taking a little chance, but I've kind of put the 62 here as the top. And you know, I can change, I can buy it back, but they only have a week. It's a week expiration. So I was thinking of selling the 65 a month out, but because Facebook went down instead of up. So if Facebook went up today, $2, I would have sold the June 65. But because it went down, I'm selling the May 30 62s. Because you know, I'm gonna wait until it bounces back to sell something further out, 65 level strike. Okay, got quite a bit. XLU. So, if you guys have been following me for a while, I've been talking for the past couple of days. I've been talking about how XLU was stronger during the whole time in 2000 when rotation was going on. So even though the market was selling off, XLU was going up. So I'm kind of thinking like that same thing. So what I'm gonna do is, because I think XLU is a safe haven, I'm actually gonna kind of like lean long and keep selling all these wings against it, right? So I did a 1x2 where I bought one September 38 and these 38 calls and sold two June 43 calls, and basically I'm gonna keep selling to pay for these. And as you can see, the premium isn't that much. So if I get away with a few of them, then basically I would have bought these calls for intrinsic only and no premium on top of it. And then if I sell more, I'm actually buying XLU for a lower and lower price. And meanwhile, I'm going to actually sell the strangle as well, right? So I'm going to sell the wings. I like selling the 39s just because, you know, I would buy XLU at that price anyway. The other kind of stuff I was looking at, because I was looking at, and this is purely because I was looking at the chart, not so much like there was order flow. The order flow is actually pretty bearish, right? They're buying a lot of these 42 puts, but I figure, you know, like it might move, like the one standard deviation might be like somewhere here, like maybe 40 and a half to like 43 or something. So I was actually working on selling. So you see all these orders. I have a lot of orders working right now. I'm thinking of selling the June 41 and a half put and the June 42 and a half call strangle for 120, right? So I'm going to sell those for 120 because my break even then is like 40 and a half and 43 and a half. So like 40 and a half and 43 and a half, and I like that, but I haven't been able to get it off yet. So let me see what my, yeah, so I'm trying to sell for 120 and it's actually moved away from me, right? So I'm actually going to try to adjust. All right, so maybe I get filled because I'm trying to collect 115. But I like that trade, so I did it. So I think what I'm going to do is I'm going to actually, I picked this stock or this index to be like steady while the market is going to be gyrating tremendously, and it's steady moving up, right? So I feel like every step of the way, maybe people will be inclined to pile money into this index versus taking it out. So this is the monthly chart. You see how it went up and then it went down in 2008, and basically it's at the same trend right now, right? So they tend to sell off basically later, even after the large caps. So even when people start selling off the large caps, seems like people are still kind of putting money into the utilities. So that's the reason why I think I'm gonna pick this one. And it can change, but for now, I'm gonna do it. And the other one is this NQ. So NQ basically are gonna delay their reports, right? So I was looking at the straddle. It was Yeah, so it was trading around $8, and I was trying to sell this for $1.50. So like you see this $1.50, I'm not gonna get filled now. Most likely not. But this is the reason why I did it. So usually when there's like this big sell-off, wherever it finishes today, basically my thinking is tomorrow the stock will trade lower, but it won't hit a new low, right? So whatever the low is today will be the low of tomorrow, in my opinion, and then whatever it ends up today will be the high of tomorrow. So basically, you know, the low and the high, where it closes, not high, where it closes today and where the low is today is where I think this stock is going to trade tomorrow. So I don't know if that's clear, but basically, wherever it closes today and whatever the low was today, so let's say the low was like 751, let me actually see what the low is. Oh, actually, it's up here, right? Yeah, so the low is 721. So let's say this stock NQ ends up at 8, right? My thinking is it's going to trade between 8 and 720. So maybe 750 is where it ends up tomorrow. So that's my thinking. And these options are ridiculous, right? So ridiculously high. Because if you look at, you know, they've gone down quite a bit. But if you look at this one, which is, what, 50 cents. So like 5%, let's see, what is that exactly? Yeah, so 6.7% out of the money options with 1 day to go is trading at 22.5 cents, right? Which is like 3% of the whole value. So like, for you to get a 1 day protection, you actually have to put up 3% of the whole stock price. You know, that's pretty crazy. So what I wanted to do was sell 2 of the calls and sell 1 of the put for 150, but that doesn't look like it's happening. I am thinking of maybe like wherever this closes, maybe buying 1 of the May 8 puts and selling 2 of the May 7 puts, right? Something like that, depending on where it closes, and that might work. But in the end, I'm not sure. Like, it'll depend a lot on what the pricing is at the end, but I would like to sell something on this NQ. You know, maybe I just decide to sell the 7/8 strangle for 50 cents, right? And then the thing with this is it's very tricky. So you might have to, if you sell a lot of the 7/8s, you might have to buy the 6 and 9 wings. So you make it into some kind of condor. This kind of stock can like really move on you and hurt you if you do not respect the options. So you would only sell a little bit if you're doing it naked, and if you want to do it a lot, you would actually sell, but then buy the wings to protect yourself, right? I think they were mentioned. I don't know if you guys know this company called Muddy Waters. They do research on like fraudulent companies, and they think that this company is basically worth 0. And now that the fact that they are delaying their financials, you know, is giving more, you know, I guess support to what they're claiming. But anyway, that's that. So I got a bunch of stuff working. So if you can see, this is all my trades that are working. So we'll see how that goes. Oh, Symantec. I want to talk about that a little bit. So I bought this spread for 14 cents, and now basically, I don't know what's up with this stock, but basically it's up when the whole market's down, right? So this spread, basically that I paid 14 cents is now only worth around 10, right? So what I want to tell you guys is, so I bought this spread for 14 cents when the stock was trading like 20.50. I basically was wrong after earnings. See how much it moved after earnings, and literally I lost a third of what I put in, but it didn't go to zero, right? So, and I had a chance for it to pretty much triple the money, and my risk looks like was 1/3 of my money, which is, and if you think like the percentages like around 50-50 or you know, 2 to 3, it's still very good odds to do something like that, right? To be able to triple your money versus losing 1/3 of your money if you're wrong, that's pretty good. So it's a great trade. It doesn't look like it's going to work out. I'm actually contemplating if I should keep this and have it turn into stock, but obviously I can't do 15. So I was thinking of maybe dumping 10, right? So I can do 10 lot, get out of them, and then I can try to be short 500 shares, which maybe I can hold. And basically what would happen is if I own these calls, and so I'll own 5 calls and short 500 shares, I basically synthetically own these puts for a dime, and if Symantec goes down, I can actually scalp stock against it. So I can scalp stock the whole time, and if it falls below a certain price, you know, I basically have protection because I have these 5 calls against the stock, right? So that's it. Like I said, tomorrow I'll be doing it at 9:30. Also, if you guys want to try this out, go to livevol.com, LivevolX, and get a free trial. Also, I'm getting a bunch of guests who come to the office to check it out. So if you're inclined, if you're around the Bay Area, feel free to drop by. Just send support@livevol.com an email, and then tell them that you'd like to stop by, and I'll try to arrange a time for you. But anyway, I hope your trading goes well, and I'll talk to you guys later.